first, we start off with the power of Netflix. This guy's favorite song. It's Pete's ringtone. The streaming giant flexing its pricing power with a $2 increase for most subscribers, pushing the price from $11 to $13 for standard users. And investors are loving it. The stock is surging today, now up 50% from the December low. So how much pricing power does Netflix have? Are there other stocks out there that have a similar ability to hike prices on the consumer?
That's my favorite song.
It's your wedding song.
You know, it's a very festive, very emotional.
It's an empowering song.
Yeah, it's an empowering song. Get to it, Guy.
Get to it, Guy.
Apparently, Netflix has quite a bit of, companies where you don't feel it. Like believe it or not, I am a Netflix subscriber. I have no idea how much, and I don't think I'm atypical. I don't know how much I pay. I don't know where the bill goes to. I don't know how
magic.
No, it's magic. And I think you can increase prices, and I think 80% of the people that have it have no clue. And that's simplistic, but I happen to believe it's true. We've been bullish Netflix into the earnings release. I believe they release on Thursday. I'm sort of skeptical, as a lot of people are, why they would announce this now ahead of earnings. Doesn't matter. But to answer your question, who else sort of fits in that category? I don't think Disney does, quite frankly, because you see the bill. But a company like Amazon, I think this absolutely empowers Amazon, not to necessarily act in kind, but in the back of their mind, they say, Netflix has done it. We can do it to our Amazon Prime people as well.
Well, if content is worth this, then maybe Amazon's content should be worth more. I don't know.
Just think about it. To Guy's point, how much do you pay for Amazon Prime right now? There's a lot of people who have no idea what they're paying for that.
Do you know? Do you know?
It's $100, right? I think it's $120 now.
Yeah, I don't know.
So and you get video, you get music.
Yeah.
So you get a whole lot for Amazon, which makes everything look a lot more expensive. But I think Netflix, Amazon, right off the bat, pricing power.
But is this real pricing power, or is this just the consumer's laziness to actually look at their bills and figure out what they're paying for things?
Well, so if you believe that that Netflix, first of all, is really what I think we're talking about first, has enormous competition, which I do think that there's not a whole lot of pricing power. I can't argue that this is a company right now that certainly continues to probably deal from strength, and that's why they're doing it right now. I think if you look at Latin America, where 40 odd companies are, outside the United States are actually going to be hit with higher prices, I'm not sure that there's the same kind of insensitivity to higher prices. So again, part of the Netflix story really is a global expansion, and that they're somewhat saturated in terms of U.S. subs. And I think you have to make some assumptions that at least I would, that it's not going to be a straight line without competition.
You know what pays my Netflix? T-Mobile. And I bet you a lot of people have those deals now. I don't know how incremental or non-incremental that is, but a lot of people get their
Why is
Netflix.
T-Mobile playing your
It's a
Netflix?
bundle.
You get free
a bundle.
Netflix with
What am
your
I doing
T-Mobile.
wrong, Pete?
Yeah. So it's a bundle, and they actually
John
absorb the
Legend.
increase as well. So there's a lot of things that they do where people bundle together, whether it's telephone or something else, where it's paid for, and that's a growing amount of
And I don't know how
subs.
saturated we are even yet necessarily in North America. And I think besides that, I think all you guys brought this up already, but the reason there's pricing power is people just probably aren't looking at their bill, whether it's Amazon or Netflix. I mean, they look at it and they say, you know what, $120 for the year, it's worth it to me. If they raise it by $5 or $10, still worth it to me, kind of a thing. I think that's the attitude people have with Netflix right now as well, because they've got the content people are looking for. Yes, there's competition out there, but I think the fact that they continue to reinvest in themselves and they continue to expand. If you look at the last couple of North American numbers, they have beat the expectations fairly consistently, Netflix has. And I think Amazon sort of has that same sort of pricing power right now.
Let's play Tim's argument out, though. I mean, let's say that subscriber growth in the U.S. is sort of saturated, that we're reaching almost full subscribership here in the United States. As long as you can continue raising prices on those same pool of subscribers, isn't that all that matters?
That offsets subscription growth, right? And you see, listen, last quarter was good. I remember Steve talking about the last quarter being a bellwether for the earnings season, and in a lot of ways he was right. I mean, the stock did really well for a day, reversed, the rest of the market followed. The last quarter for Netflix I thought was pretty good. I think this quarter is going to be equally good. I think you could see the same type of reaction. I think you're going to see a rollover. To answer your question, I think they can continue to sort of ratchet up prices. They made a mistake about 6 years ago-ish. I think they were too young. They were too in the infancy stages of growth where the consumer didn't want the price raises. Now I think they've locked enough people in. They've had this tremendous land grab where I think pricing power is true.
They developed their own content.
Right.
Right, so that was
That's
the key.
a key difference.
People in droves went to Netflix. But when you look at it as a whole, I think it is indicative of which way the market's going to roll. So I think it has topped out at these levels. I think it is a sell, and I think it's the last gasp.
You're talking
about
the stock itself as a sell?
I think Netflix is a sell. I think the overall market is a sell. Because you got to remember, the reason why these things rallied is they were so beaten up in December. It was the value growth. Now you're going to see probably a retracement of that.
Well, so for Netflix, also really ask yourself the question: is content becoming more expensive, or is it getting cheaper? It's getting cheaper, and I think
is it?
I think it is.
It's getting cheaper.
Well, look at all the things that I can now watch on TV for the same price. In other words, whether it's bundling or whatnot.
Cheaper for the consumer. Cheaper for the consumer.
Yeah, right.
Yeah, okay.
Yeah.
As opposed to the production of content.
Right. No, and in fact, I think for Netflix, this is a big problem. The cash burn. They were supposed to be cash flow positive last year. So my point is that I think there is a point at which I've already argued that I think there is sensitivity on price. But you get to a place where a number of other people are going to be offering packages that I think are probably around that mark, and I think it makes a difference.
Did anybody think it was strange to hear about a price increase just days before Netflix is due to report earnings?
Yeah, we said that. Oh, good, Pete.
And no, I was just going to say, what kind of a read-through do we have out of that?
Maybe it's like a little conspiracy theory of me, but it makes me think that Netflix wants you to say, hey, this is great.
Because subs are not there?
And then on earnings, there's going to be some sort of a miss or an increase in spending, an increase in the amount of debt it has. Which is
and I would look more towards the
certainty.
spending side of it, because we've seen that time and time again coming from them in terms of the spend, the reinvestment and the spend of what they're doing to try to get that content and that globalization, trying to get the international subscribers as well. This is a stock that I pitched here back in October, and the stock is virtually unchanged now through this huge run. But I'll tell you what, it's a great example of how do you navigate through the markets right now. I've been selling calls for the last 3 months in front of this stock. Now I've sucked in all of that premium against that. Stock's done virtually nothing.
But you made money on it.
And yet when you look at what the return is, it's pretty incredible. So it's a great example of how you can use the derivatives market to protect yourself into something like this, where we were down almost 100 points and have come all the way back.
Yeah.
You know what we call that? Call that a synthetic dividend.
You're darn tootin'. You create your own dividends, right?
Yeah.
Giddy up.
Go ahead.
Two things. First of all, I actually think that this could mean that they have really good news to announce. I mean, they're going from a position of strength. Yeah, look, they could basically have some reinforcement in terms of their subscriber data, or in fact their viewership, which allows them to feel like, you know what, let's push it out there. But I think pricing power is obviously something we started the segment with. Who else has got it? And let's think about Apple. I mean, Apple is another one of these companies
Isn't there warning?
This is the question. The high-end phones are not the ones that there's a lack of demand on. It's really the ones in the middle that I think, and the too many SKUs. But if you look at that XS, that was not an issue. In fact, the ASP started to go up over the last 2 quarters, and that mitigated the lack of demand on the lower stuff.
See, I think they don't have pricing power, and I think that when you look back on the charts where AT&Ts and the T-Mobiles started, when they weren't subsidizing them anymore, it kind of fell off a cliff. When you look at Apple, it retraced a lot of that move, but it doesn't have the guy in the back pocket who's paying for the phone anymore, so they have to work that out on their own. It becomes leasing a car now when you're buying an Apple phone.
Yeah.
I'm just going to answer your second question. I think Reed Hastings has been at this too long to make what would be a pretty rookie mistake by announcing this price raise today, releasing a lousy number on. I just don't see them doing that at this point in their history. So I'm sort of would be in Tim's camp, but I'm in Steve's camp as well, that this stock is going from 234 to 350 in less than a month. I mean, that's a pretty ridiculous move. I think just to be smart, I think you have to be sort of taking some money off the table.
with Camper Guy, and I got to tell you something. The streaming growth, and Steve, and the whole camping group.
Camp?
I mean, we're camped together. But this whole streaming thing, I think, you know what? When you look at Netflix, there still is the growth. And I say that in terms of when you look at the subscriber growth in North America and you look at it internationally and you see some record numbers out there, and then you start to tack on to some of the other areas where you're seeing growth in terms of streaming. I mean, that was up 36% last quarter. This is a company that's showing you growth. Now, they got to get free cash flow, which they say won't come till about 2021.